Happy Friday, traders. It is 8:02 a.m. Chicago time on the 5th of September, 2025. Thanks for joining me here today. Always nice to see you. This is episode number 2682. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Those of you who have been listening a long time hear that disclaimer every time. What does that do to you? Does that make you cringe? Do you remember why that disclaimer has to be said every time? Anyway, let's jump right in to the pre-market summary sheet from Convergent Trading. More details at convergenttrading.com. The overall posture is actually mixed, leaning bullish, risk-on sentiment. Right now, it's once the non-farm payrolls came in, we pushed down, and then we are bouncing back up. Let me just pause for a second and say the week has gone by. The first week of September has gone by. How are you doing? How are you doing? It's a short week. We had Labor Day on Monday, but how are you doing as a trader? How is your trading? Is it improving from day to day, or what's going on there? Would love for you to type that into the chat. Maybe get some conversation going while I'm babbling on about the markets here. Very interested in how you all are doing. Okay, so mixed, nothing really in terms of earnings. And we had non-farm payrolls today, U.S. unemployment non-farm payrolls. And the numbers were disappointing. The expectation was for 75,000 jobs created. The U.S. was only able to create 22,000 in August. That is seasonally adjusted for August. There are 2-month net revisions. The 2-month net revision is down 21,000 jobs. The problem is that, the problem is that I don't know what to believe about these numbers anymore, but the unemployment rate was in line, and the average hourly earnings were in line. Canadian employment change was lower than expected as well. The unemployment rate ticked up for Canada. And then U.S. manufacturing payrolls came in at negative 12,000. We lost 12,000 manufacturing jobs, expected to lose 5,000 for the month. So not so great over there. Private payrolls, 38,000 versus 75,000. So pretty crappy number all around. This opens the door for the Fed to cut rates, right? As long as we see, even though we're above the inflation rate, the target inflation rate, we'll see if Powell actually gives into the pressure by the White House to cut rates. U.S. President Trump said he would be placing chip tariffs very shortly, which will be fairly substantial, but signaled Apple and others will be safe during this dinner with the tech CEOs. Anyway, so very transparent there with the lobbying. U.S. President Trump, looks like we've lost India and Russia to the deepest, darkest China. May they have a long and prosperous future together. White House said U.S. President Trump signed an executive order officially implementing U.S.-Japan trade agreement. So that's good news. OpenAI to reportedly launch first AI chip in 2026 by Broadcom. Anthropic is to stop selling AI services to majority Chinese-owned groups. Lululemon slashes outlook on demand. Tesla proposes $1 trillion pay package from Musk. Unbelievable. How much money can you get depending on performance? Just insane. The S&P is balanced so far. It is breaking higher. It's been balanced. We've had the DGPs, or the day generate prices, overlapping the overnight point of control. And now, once we've tested the 6,500, 0250, which is the low of the day, we are rallying. Again, mixed news. Mixed news when it comes to these non-farm payrolls. One says that the economy's slowing, not good for earnings, but the other also says that we're most probably cutting rates. So you're going to get this kind of whipsawy action that we saw, completely expected. Not much in terms of the calendar. We do have good volume. We're currently at 176,000 or so, 176,000 contracts, 177,000 contracts for the overnight session. The common volume at this point is a little under 140,000, and the edge of what's normal is 220,000. So we're still inside of the range when it comes to our volume, overnight volume. The inventory is 93% long, meaning that 93% of the overnight volume occurred above the close. The relative range for the S&P is okay, is in line. Relative volume is a little bit higher. Relative range for the Nasdaq is actually pretty high. The Nasdaq's finally catching up to the S&P in terms of its relative position to the highs. The Nasdaq still hasn't made a new high for the year, and relative vol in the Nasdaq is in line. The Russell has a lot of range. Russell extremely macro news, and especially interest rate news sensitive if you're trading the Russell. And it's doing it on pretty high volume. Crude is getting whacked again. Crude, as I had talked about on Wednesday, doesn't seem to be holding higher prices very well. The OPEC news pushed it down, and the anticipation is it would run through the 62 handle, fall through the 63 handle, run through the 62 handle, and that's what it's doing currently. Crude has very wide range, 172% of the relative 20-day range at this point of the day on 151% of relative volume. So quite a bit going on there. Gold had a big pop higher. Gold made new all-time highs the other day, 36.40, and we broke them this morning, 36.44.90. So gold, when you look at gold and you are paid, or your savings and pension and retirement, and you are in US dollars, and you look at gold and how high it's going, it is a proxy. It's from a macro perspective, it is a proxy and an expression of the devaluation of your paycheck and your savings. So be sure to speak to someone about diversifying your holdings, especially into commodities. You need hard assets in this kind of environment. It's not investment advice. Same with silver. The 30-year Treasury, pretty strong higher this morning. Very wide volume, 195%. So there's a lot going on. The bottom line is you see a lot of dark blue. If the heat map on this sheet is yellow, then just be mellow about the open. Yellow is mellow. Take it easy on the open. But if it's blue, what rhymes with blue when it comes to trading? If it's blue, then be glued to your mouse or something. Anyway, silly. But that's what's up. Okay. So let's take a look at a couple things. I'm gonna do a quick review of what we talked about. This is Wednesday's video, and in Wednesday's video, I talked about the filling in between 3460 and 6460 and 6430. The idea is that we were very likely to fill in right in the middle. I drew that in there, and I explained why that would happen and why we are likely to fill in the middle of the range. And I said, hey, keep your hands off the mouse in the morning. I'm going to show you what happened on Wednesday just as a review. Here's our intraday chart. You can see right here, it went right up to right up and a little bit through 64.60 and right up and a little bit through the 64.30. Went to 25.50. And in the morning, I think it went to, let's see, 61.75. And so that was completely correct. We did fill in. Look at how we filled this area in here. We did fill in this area a little bit. Let me zoom out to give you a more accurate picture. You can see that, this was kind of dipped in, and now it's, what's going on? Okay, clear. And now you can see it's starting to fill in a little bit. This is what we want to see for the next leg up. This is what anybody that is looking, this is what anybody that's looking for a firm long is looking to see. They don't want weak structure underneath them, and that's what we got. And now we are shooting up, and we're shooting for the stars. We broke the prior all-time high at 65.23. which was done in RTH. And then in the extended session, we have a new all-time high at 65.40.50. In RTH yesterday, we did not get a new all-time high. So when we go and look at the market profile chart, there are a couple of clues in here. These are things I'll go over with everyone in the accelerator program that starts on September 12th. This kind of finish, where we finish at the top, we open on the edge of the prior day's range, we poke in. This is a balanced day. What did it do? I'll draw you a line because I can't wait for your answer. What did it do on this test yesterday with the prior completely balanced day as expected, as discussed on Wednesday? What did it do? It came down and it tested value high on the market profile chart. It tested value high into the 64.56, turned around, and it started one-time framing higher, right? So it tested down, it tested down to where? Value high of the prior day on a balanced day. Remember, we don't care about value unless we have balance. Value without balance is meaningless. Value without value when the market's in price discovery or is trending or is imbalanced doesn't mean anything. It's exactly the opposite. When we are in a frenzy discovering price, that's not value. So on a value type day, we pay attention. On a balance type day, we pay attention to value. And yesterday was a highly technical trade. So we opened above the prior range. So we had a slight gap open up. We come back into the range. We close prior settle. So we have a statistic for that, but we opened out of range. That statistic's a little bit lower than the 75-ish%. Does anybody at CT here can pull up the latest statistic and look that up? What is the prior close statistic when we open above the range? Can you type that into the chat, please, for me? Just pull up the MSR, the market stat report, and give us that figure from the quant report there for that situation so I can quote it correctly. I know the numbers were updated last weekend. Anyway, so we move into value and then we rotate through the open and then we break the IB high. So we have range extension up, and from there we're one time framing up for the rest of the session. I mean, really, all we did was one time frame up, and then we finished at the high and we migrated the point of control to the high. Sheep, thank you for that, 54.6%. And I think that's looking back 750 days, like 3 years, 754 days or something like that. So that's 3 years looking back. The occurrence of a day opening in a gap up is also in that report. So I don't know what that is, but as long as it's more than 170 instances, then that stat is substantial. So we finish at the high, we settle at the high, we move the point of control to the high. What that tells us is the auction is in price discovery mode. Yesterday was a trend day. You could see multiple distributions on the way up, just building distribution after distribution. So it's migrating value higher and higher in a methodical way. Pretty good structure for a rally, finishing at the high. So what do we expect? We expect that this auction was interrupted with the close and it's likely to drift up. And the auction did drift up until the non-farm payroll release came. And that's what happened right here. Nice little, it was surfing the VWAP all night long into above the all-time high of 65.23, pulls back in, sells off on the non-farm payroll report, comes back to where? Comes back to our stock zone right here. The prior all-time high and double top. See it? See this blue label right here? I don't know if you can read it. Maybe if you maximize. You can see that 65.0250 was the RTH all-time high plus a double top comes right to it at 65.0250 in the overnight session and then starts pushing higher, and now we're pushing new all-time highs, right? 65.4050. So that's the narrative. So what does that mean for us? So let's just get into, because we're going to run out of time here. Let's go back and look at what we've got. We've moved, and these boxes I posted these boxes yesterday: upper balance, middle balance, lower balance. I told the team at Convergent yesterday that, hey, we're moving from the lower balance, which is this box, into the middle balance. And so as we opened and tested down, the expectation is the target becomes this upper LIS right in that 64.92 to 64.98 area. It hit it and it went through it yesterday. That's the key target for me. We had a nice little consolidation. You got to pay attention to this area in the future between 64.80 and 64.85. That's going to come into play. This band right here is likely to move right there, and that's going to become a key area to check in the future. And then we ran up on what is a relatively orderly price discovery pattern into the upper distribution and into all-time highs. So this morning, we're in all-time highs. We're in the measured move zones. We pushed the 65.34 measured move zone. The next area is 61.75. And so today, it's about looking at how the gap is treated. Today, we're gapping open. Gap rules apply. So the question becomes, for me as a trader, is how is the gap treated this morning? Do we get responsive selling, people coming in and liquidating or hedging their positions into the future, so they're selling on the way in? Or do we open in a gap, do an open auction out of range, make an attempt lower, and see buying on higher volume with nice collisions, and we're looking for a long and targeting that 65, 61.75, and that actually is beyond 1 vol sigma. The 1 vol sigma line right here, this becomes an important target to hit. But the main target when it comes to the price map is that 61.62 area. So the main thing that's expected here is look for a pullback in here somewhere into the prior month's high, 65.23, maybe a dip below it. Look for a push up, higher low, get long, and then work the overnight high as a scale, work 1 vol sigma as a scale, and work the stock zone as a scale or target. That would be the primary scenario that plays along with the market imbalance to the buy side and the session imbalance to the buy side. Am I speaking gibberish here? How many of you are just completely lost? Just tell me. Just say, dude, this is completely, you've lost me. The second scenario is we gap up, open auction, or an open test, and we're looking for an impulse down. That is a wider than normal rotation. In the S&P, an impulse down is 9 points or better. Look for an impulse down. Look for a weak retention, a weak pullback towards the high put in as it does its test up. I'm looking for a weak push higher, and I'm looking for it to fall below the open, looking for the short, and targeting yesterday's close, yesterday's point of control, yesterday's prior settlement. And if it stays in here and it tries to poke out and it falls back in again, then we're going to look to add to this trade, and we're going to target our line in the sand that was formed yesterday. This consolidation in the middle of the range yesterday. And so scenario 2, and I'm not going to bother changing colors like I always do. You guys aren't a fancy crowd. And then we're targeting that 64, 85, 80 area from yesterday. Do you get it? Cool. So that is the gap, because we're opening in a gap versus the prior session. Those are the gap plays. It's either going to open in an auction and break, or it's going to open. People are going to come in and buy it. That gets exhausted and it starts to push back in. And depending on how it pushes back into the range, we're looking to hold on to something into the 64, 85, 80 zone. Okay, that's my plan for good old ES. Here's crude. Look at, I have not moved these levels in a couple of weeks. And look at how it's playing these key areas. Remember, as it poked higher and finished lower, I said, eesh, this is very likely to test 63. We talked about that on Wednesday. 63 got tested. It poked through, tried to push back up, stayed in the 63. And then from here, it's just really a long liquidation is very likely. And it moved into this level that I put in. Come on, baby. Come on. It pushed into this level that I put in from August 13th. Yep. Hang on. Yep. Way back here. August 13th, pushed into this zone, this LIS zone, and we tested it to 61.77. The LIS zone is about 61.50, 58 or something to 72, 74. And it's testing it. So this is very likely to be done in crude. So crude has an impulse, but hasn't had a real continuation. So if I zoom out, or if I zoom in here, you can see that there's been an impulse. This is the impulse, but we have not had a continuation and a test, or at least a liquidity check below there. I'm anticipating that we will have a liquidity check. I'm looking for it to open, revert back. This is the magnet zone right in here. This is the big balance zone where the market really loved prices for quite some time, 62.30 area. But I'm looking for it to poke through and then finally come out back in here and get trapped in the magnet. That's my main scenario. I'm still bearish crude because the one-time framing is to the downside. The imbalance, there's a sell imbalance in the market multi-day. There's a sell imbalance in today's session. So I'm looking to trade from that side. I'm looking for a continuation or a probe of that 61.77. It's very likely to do that. The probability is quite high, but like all probabilities, I don't know what it's going to do in the next one. And then once that's done, we're likely to exhaust the sellers below that green zone you see there into the 61.56 or so. It's likely to dip through. Once it comes back up, it's very likely to hold in the magnet. The magnet is a high volume zone and an acceptance zone. That's crude. NQ is just quite a bit more aggressive about the rally. You could see it crossed both zones very fast yesterday, and it came all the way back up to this red zone. This red zone has been here also courtesy of August 13th, but it still has not taken out this all-time high, which is a 24,068 right? So 24,068 still in play. As we said, the ES is much stronger. Even though this had an impulse pullback continuation, it is now correcting. Like Elliotiers will call this an ABC. So what we've done is created a big W, and we broke the top of that W in the overnight session. This is relatively bullish. Expecting it's trapped right in here in this red zone. It's likely to be trapped here for a little bit, but once we get through, we're looking for a pullback towards there to target the all-time high, because it's the only thing remaining. Okay. I wanted to talk about emotions, performance, and so on, but these things are supposed to be 15 minutes, folks. The Trader Bite's supposed to be a quick bite before you start trading, and they turn out to be these long lessons about auctions and price action and order flow. Sorry about them being so long, but it's hard to condense so much information. I want you to act on your own. Good luck today. Don't forget to subscribe to the channel and set your alerts. Of course, a thumbs up to each video is appreciated, because what it does is it makes it more visible to other people who might search for, how do I trade futures like a professional? It'll help people find it better. The more people who like it, the more people who subscribe to the channel. So I appreciate you taking a moment to do that. It doesn't cost you anything to subscribe or to click like on the video. Happy to hear your comments, and I'm going to go through and look at what you guys wrote. Good luck today. Have a great weekend. Don't forget, the market likes to curb risk into the close, so don't hang on to those longs to the close is what I think. But follow your plan. Good luck. I'll catch you on Monday morning. Cheers.